Welcome back. Still watching Business Morning. Dumebi Yeke now joins us for the commodities update. Great to have you, Dumebi. Good morning.
Good morning. Thank you for having me.
All right. So Brent currently above $70 per barrel. What is your outlook for global oil prices? Seems the bull run seems to be,
Fading away.
fading away gradually.
Yeah, I mean, all markets are very sensitive. Whatever news comes up, whether in the U.S. or China, always has something to do with the oil markets would always react some way or the other, either positive or negative. Outlook for oil right now, we expect oil prices to actually trade around $67 to $70 per barrel. That's still good for Nigeria, but in the end, it simply means that we see oil prices falling from what it currently is trading at. Why? Because we have an outlook that oil supply would increase. OPEC has, maintained its ease on output costs. So there is going to be an increase in oil supply in the coming term. And there is the fact that the U.S.-Iran deal, would come into play, and that means that there could be an increase in oil supply by about 2 million barrels. So 2 million barrels per day. So all of that put into place, we could see oil prices fall from what is currently trading at or remain at $70 per barrel.
Okay, talking about the outlook for the oil market. Now, we just recently, the World Bank released its global, regional, and of course, domestic outlook.
Yeah.
Looking at the underlying assumptions, how would that play out, on the commodities, global commodities market, of course, which includes oil here?
I mean, in the beginning of the year, we've seen that global commodities have been increasing, be it copper, grains. We've all seen those prices increase. At the end of the day, the underlying assumptions for the World Bank, first of all, for the global economy, is that the global economy would recover. And if it happens that global growth increases about 5.6%, according to what the World Bank is saying, this will be the fastest post-pandemic growth in about 80 years. And the underlying assumptions are that number one, a few advanced economies like the U.S. and China would actually push this growth. Regionally, that's with focus on sub-Saharan Africa. Definitely, several economies within the region will still continue to struggle with the COVID-19 pandemic, high debt burdens, and that would reflect in the GDP growth for the region. A very significant thing is that the dominant economies, South Africa, Nigeria, Angola, are still, struggling with sluggish growth, and that's going to, eventually tell in the direction of growth for the region. Now, bringing this home to Nigeria, the World Bank has, revised upwards its forecast for Nigeria to 1.8% from 1.1% it was forecasting as at January. At the end of the day, their assumptions are, number one, they're assuming higher oil prices. Number two, they're assuming structural reforms in the oil sector. Number three, they're assuming a flexible exchange rate and market-driven exchange rate regime. And number four, they're assuming that vaccinations would pick up by the second half of the year. All of these assumptions are good. We're seeing things happen in this regard. But the big question is this: is this sustainable, and how much of an impact would this have on government revenue, on forex supply, on commodity prices?
Yeah.
And eventually, how would this affect the commodities market? In a situation where we're seeing oil prices trade at $70 per barrel, good news, but at the end of the day, Nigeria's break-even point to actually have enough revenue to meet domestic needs, to meet capital expenditure, is $138 per barrel.
Wow.
Will all prices get to that point? That's a very big question.
Number.
A very big question.
So if these assumptions are not met, then
if these assumptions are not met,
we can't expect anything.
Exactly.
All right, so still on the global happenings, the U.S. inflation data for May will be released today. Consensus forecast has risen from 4.2% to about 4.7%. What does this mean for Nigeria?
That's a very good question. So the U.S. inflation data, like you rightly said, will be released today. Consensus forecast 4.7%. And the U.S. Fed, we've seen their opinion that inflation in the U.S. is transient, meaning that's just for a short period of time. But, analysts have come forward to say that this could actually be persistent. We could see an aggressive rise in the U.S. inflation. And if this happens, that eventually U.S. inflation increased to about 4.7%, the U.S. Fed will be under pressure to cut rates, rather increase rates, sorry, they'll be forced to increase rates. And if they increase interest rates, that is, they move away from their accommodative monetary policy stance, we could see other central banks move in tandem. And what this means is a global rise in inflation rates. And if global inflation rates increase, Nigeria's debt service costs would also increase. And that's terrible news for
ripple
Nigeria.
effect.
But of course, looking at Nigeria, we already have
Oh, yes.
high inflation. We've seen it
Exactly,
galloping, even though
exactly.
we saw that tapering a little bit. But then, from your forecast for May,
Yeah.
you're expecting the May inflation to inch up,
Yes.
a
Yes.
little bit. In
Yes.
other words, what we saw in April is just a blip.
Exactly. From our forecast, we're projecting rather that inflation would increase to 18.2% in May. Why? Because of the underlying factors of supply chain disruptions, insecurity affecting food supply, continuous increase in food prices, the effect of the planting season, the exchange rate pass through to imported commodities. All of this, will continue to affect food inflation, and that in turn would continue to affect headline inflation.
All right, so Lagos is on the radar today. The commercial hub of Nigeria and the top destination for capital import is now the second worst city in the world. Incredible. According to EIU. Why is this so? And do you see any improvement to these numbers anytime soon?
I mean, concerning the improvement, we just have to keep our fingers crossed and hope that whatever policy the state governments would take up in terms of infrastructure, in terms of healthcare, in terms of economic stability, would actually pull through and in turn, move Lagos State up the ranks. So the EIU actually did this survey between February and March. And
But then one would wonder what they must have seen to
yeah.
declare Lagos as the second worst
Second
city.
worst.
yes,
in
so
the
so
world.
their survey actually cuts across three to four ranking indexes. So we have the stability, that's macroeconomic stability. You have healthcare, you have education, and you have consumer expenditure, or rather the living standards of people within the state. So basically, what they're saying is this: that economic stability or macroeconomic stability within Lagos State is really low. What they're also saying is that the healthcare facilities within Lagos State needs to improve. Education within Lagos State needs to improve. Infrastructure also needs to improve. So at the end of the day, in summary, what they're pointing towards that living standards within Lagos State is deteriorating. And it's not far-fetched. If you look at the average Nigerian in Lagos State, even if you're earning about 250 to 300,000 naira monthly, how much of this can you really say is for yourself? Food prices are increasing.
Well, that brings us back to the issue of the inflation
Exactly,
that we're talking
food
about.
prices are increasing.
Yeah.
There is so much traffic in Lagos State. During the rainy season, there is flood. And even if we're seeing an improvement in infrastructure development, we see that they're embarking on several road construction and all of that. The question is, the big issue is this: all of these things are happening simultaneously. And how is that affecting the individual who is going to who has to be productive enough to increase outputs that will tell in our economic stability within the state? If you're going to work, you're spending about 3 hours going, 3 hours coming. Your productivity is going to be low. And now imagine the countless companies within Lagos State who are, who their output depends on how effective their workers are. So if productivity is low, that would eventually tell in our
But is it that
living
Lagos is
standards.
not making enough money?
No, if it is by revenue, Lagos State is doing well compared to other states in the country. Our IGR is Lagos State. The IGR of Lagos State is really high. If you also look at the forex inflows or capital imports within Lagos State, it's really high. So by numbers, Lagos State is doing okay. But at the end of the day, when we look at it from a developmental economics perspective, when you look at the living standard of individuals within the state, it's relatively low.
No.
And the index that we're using, that the EIU used for this, are the basic human development indicators.
Basic.
Health,
Now,
education.
What do you think the Lagos State government can actually do to reverse this trend? But then, can they really actually do it alone?
I mean, it just means that we have to go back to the basics of economics. number one, how can you alleviate people from poverty? You have to create jobs. How can you create jobs? You have to encourage investment. And for you to encourage investment, your environment has to be safe enough for business operations. So if companies that want to run businesses they don't feel safe, they would stay off. Also, you have to recognize the fact that you also have to encourage food supply, food production within the state, and ensure as well that health infrastructure is improving within the state. So, and also to an extent, you also have to look at the population. How can you meet up with the demand of the people within the state? Because at the end of the day, by the time you look at the infrastructural resources in Lagos State compared to the population or the amount of people living in Lagos State, it's really high. So there is a lot of pressure on infrastructure within the state. How can the government be able to, meet this requirements and ensure that, okay, we have this amount of people living within the state. How can we ensure that the available resources are efficiently allocated to these people?
All right, so let's look at this foreign trade data now. Confirms that manufacturer concerns of not having access to, raw materials. What do you think is driving this?
The basic, they have issues with, forex. A lot of our manufacturers import most of their raw materials, and if they're importing their raw materials, the fact that the naira is depreciating, the fact that they have low access to forex will, definitely tell in their sector activities. And over time, from the FBN PMI report in March, it was clearly stated that the manufacturers are complaining about this. And why is this a problem? If a manufacturer that would normally uses about let's just say 80% of their revenue to import raw materials, which is a hypothetical analysis now, use 80% of their revenue to purchase raw materials, and they have to import these raw materials. They're getting about 10-20% of their forex from the official sources, and eventually have to get the remaining 80% from the parallel markets, which is a lot more. So their blended rates, the purchasing forex at a blended rate of about 477 or 480 naira per dollar. That's a lot, and
big.
each time the naira depreciates, it affects their ability to purchase, raw materials, because it's going to tell in their import costs, and that will eventually tell in the commodity prices.
All right. Thank you very much, Dumebi.
Always great to have you.
Always great to have
Thank
you.
you so much. Thank you.
All right. We do appreciate your time. Okay. We take another break, and when we come back, we look at a few developments in the market. Keep it here with us. This is Business Morning.